Project Freedom just started, and Iran is already fighting back. 6 Iranian boats sunk, UAE under missile attack for the first time since the ceasefire. A South Korean cargo ship on fire in the Strait of Hormuz. Brent crude spiking 5% to $114 in a single morning, and the stock market sliding into the red as investors realize this is not over. Most people thought the ceasefire meant the crisis was behind us. Today proved them wrong in the most dramatic way possible. And here is the part that should concern every investor watching this right now. The market has still not priced in what happens next, because Project Freedom is not the end of this story. It might be the beginning of the most dangerous chapter yet. Stay with me, because by the end of this video, you are going to understand exactly what Project Freedom means for oil markets, for your portfolio, and for the 5 stocks that are positioned to benefit from everything happening right now. If you want to understand what is actually happening, and not just the headlines, hit that subscribe button right now. Let's get into it. First, let me tell you exactly what happened today so you have the full picture. On Sunday night, President Trump announced Project Freedom on Truth Social. The plan was simple. The United States military would guide neutral ships out of the Strait of Hormuz through a narrow corridor in Omani waters. CENTCOM committed guided missile destroyers, more than 100 land and sea-based aircraft, multi-domain unmanned platforms, and 15,000 service members to support the operation. #investing. Iran's response was immediate. The head of Iran's Parliament National Security Commission rejected Project Freedom outright, warning that any US interference in the maritime management of the Hormuz Strait would constitute a violation of the ceasefire. #investing. And then the shooting started. The UAE said it was under attack from Iranian drones and missiles. The US reportedly sank 6 small Iranian boats in the Strait of Hormuz. A South Korean cargo ship caught fire in the waterway, and stock market indices fell while oil prices surged. Feedspot: Brent crude futures rose roughly 5.2% to trade near $114 a barrel, while US West Texas Intermediate futures crossed $105 on the news that Iran had resumed attacks against the UAE. Best online forex broker. Here is what this means in plain English. The ceasefire that the market has been relying on for the past month is now effectively over. We are back to active military confrontation in one of the most critical shipping lanes in the world. Now let me show you why this matters so much more than most investors realize. Project Freedom is not just a humanitarian mission, it is a direct challenge to Iran's control of the strait, and Iran just made clear they are willing to fight back militarily. Chevron CEO Mike Wirth said fuel shortages are becoming a growing worry in some regions of the world as the Strait of Hormuz remains closed. He told CNBC that it is not just a question of price anymore, it is can we actually get the fuel. He warned it will likely take months for oil exports through the strait to normalize even after it reopens because the sea lane needs to be checked for mines and hundreds of ships stuck in the Gulf need to exit and be redeployed around the world. Read that again. The CEO of Chevron is not talking about price. He is talking about whether fuel can physically get to its destination at all. That is a fundamentally different problem than what markets are pricing right now. The Fed's Kashkari refused to rule out rate hikes as the Iran conflict stokes inflation. That means the Fed is now considering raising rates into a slowing economy because of oil prices. That is the stagflation scenario that economists have been warning about for weeks. #investing. Stagflation, rising inflation, slowing growth, a Fed that cannot cut rates to help. This is the scenario that destroyed portfolios in the 1970s, and it is playing out in real time right now. So what do you do as an investor? Here is exactly how I would position a portfolio for what is coming, and I'm going to be direct about both the opportunity and the risk for each one. Stock number 1, Chevron. Ticker CVX. The CEO of Chevron just told CNBC that fuel shortages are becoming a physical reality. Not a price problem, a supply problem. And Chevron is one of the companies with the infrastructure, the scale, and the balance sheet to navigate exactly this environment. Chevron CEO Worth warned it will take months for oil exports to normalize even after the strait reopens because mines need to be cleared and hundreds of ships need to be repositioned. That timeline means elevated oil prices for months, and elevated oil prices mean Chevron prints money. Buffett owns over 130 million shares of Chevron. He bought more before oil hit $100. Warren Buffett does not make 130 million share bets on companies he does not understand deeply. That conviction should tell you something. Here is my concern. If Project Freedom succeeds faster than expected and the strait reopens, oil prices will pull back and Chevron will pull back with it. This is a directional bet on the conflict lasting longer than the market expects. My takeaway: the CEO just told you supply is the problem. Buffett is already positioned, and oil prices are heading higher. This is a strong buy. Stock number 2, ExxonMobil, ticker XOM. 2 days ago, the CEO of Exxon said the market has not seen the full impact of this disruption yet and that there is more to come. Today, that warning got significantly more credible. ExxonMobil CEO Darren Woods warned that the market has not absorbed the full impact of the unprecedented oil supply disruption triggered by the Iran war. One of the supply sources cushioning the market will become exhausted as the conflict goes on. Oil prices will then increase as the strait remains closed. There is more to come if the strait remains closed. The CEO of the world's largest oil company told you prices are going higher. Today, Iran attacked the UAE and oil jumped 5%. The CEO was right. And if Project Freedom turns into an extended military confrontation rather than a quick resolution, he is going to be more right in the weeks ahead. My concern: this is a bet on continued conflict. If Trump reaches a deal with Iran quickly, oil pulls back. The geopolitical risk cuts both ways. My takeaway: the CEO's warning aged extremely well in a single 24-hour period. This is a buy for investors who believe the conflict is far from resolved. Stock number 3, Bloom Energy, ticker BE. Most people watching this have never heard of Bloom Energy, and that reaction is exactly why the opportunity exists. Here is the reframe. When the Chevron CEO says the question is no longer about price, but whether fuel can physically get to its destination, every AI data center operator in America hears the same thing, and they start asking the same question. What happens to our operations if grid power becomes unreliable or unaffordable? The answer is on-site power generation, and Bloom Energy builds exactly that. Fuel cells that generate power at the facility level, completely independent of the grid, completely independent of the Strait of Hormuz, completely independent of whatever Iran decides to do next. As this crisis deepens, Bloom Energy's value proposition does not weaken, it strengthens. Every week the strait stays effectively closed is another week that corporate energy officers are calling Bloom Energy about backup power solutions. My concern: Bloom is still in growth mode and not consistently profitable. This carries meaningful risk compared to Chevron and Exxon. My takeaway: on-site power that gets more valuable as the energy crisis deepens. This is a buy for investors who want energy exposure without direct oil price risk. Stock number 4, Palantir, ticker PLTR. Today, the US military deployed guided missile destroyers, 100-plus aircraft, and 15,000 troops to support Project Freedom. Every one of those assets generates data. Every commander making decisions in that theater needs intelligence. And Palantir's software is embedded in US military systems at exactly this level of operation. Revenue grew 70% year over year last quarter. Reports earnings tomorrow, May 5th, with analysts expecting 74% growth. Net income margins hit a record 43%. Here is the uncomfortable truth. The valuation is extreme at over 100 times forward earnings. Michael Burry is betting against it. Insiders have sold $435 million in shares in the last 3 months. But here is the other uncomfortable truth. When the US military commits 15,000 troops and 100 aircraft to a military operation in the world's most critical shipping lane, Palantir's government contracts pipeline gets stronger, not weaker. Defense spending is accelerating globally because of exactly what is happening today. My takeaway: highest risk on this list, but also the most direct play on the accelerating defense AI spending that today's events are guaranteeing for years to come. Stock number 5, Micron Technology, ticker MU. South Korean stocks rose Monday, with Samsung Electronics and SK Hynix both rising to record intraday highs, gaining 5.44% and 12.52% respectively, buoyed by positive sentiment following US market performance. Here is why this matters for Micron. SK Hynix is Micron's closest competitor in high-bandwidth memory. Both are benefiting from the same AI infrastructure build-out that the Iran crisis is actually accelerating rather than slowing. Because here is the counterintuitive truth. The Iran crisis is making AI investment more urgent, not less. Every government watching Project Freedom today is concluding that AI-powered defense, logistics, and intelligence is now a national security priority. That means AI spending is going up, and AI spending means more demand for the high-bandwidth memory that Micron makes. Micron's entire 2026 HBM supply is already sold out. Next-generation product is being pre-ordered before it ships. Revenue guidance for next quarter is $18.7 billion, with 440% earnings growth. The stock trades at 9 times forward earnings. 9 times forward earnings, 440% earnings growth. Supply sold out through 2027. My concern: Micron is cyclical. If AI spending slows for any reason, Micron feels it. But there is no sign of that slowdown today. My takeaway: the most undervalued AI infrastructure stock in the market. 9 times earnings with sold-out supply is a mispricing that will not last. Strong buy. Let me bring this all together. Today changed the investment landscape. Project Freedom has begun. Iran is fighting back. The ceasefire is effectively over. Oil is heading higher. The Fed cannot cut rates, and stagflation risk is real. The S&P 500 slipped. The Russell 2000 dropped 1%. Cyclicals, chemicals, industrials, and financials were the most affected. This is what the beginning of an oil shock looks like in equity markets. But here is what history tells us. Every major crisis in history created 2 groups of investors: the ones who panicked and sold at exactly the wrong moment, and the ones who understood what was happening, identified the right assets, and positioned correctly while everyone else was reacting to headlines. The 5 stocks I just showed you are not bets on the crisis getting worse. They are bets on the reality that already exists. Oil supply is disrupted. Defense spending is accelerating. AI infrastructure demand is growing. On-site power is becoming mission critical, and the market has not fully priced any of it yet. If I had to rank all 5 for new money today, here is exactly how I see it. Number 1 is Chevron. The CEO told you supply is the physical problem now. Buffett is already there. This is the clearest setup. Number 2 is Exxon. The CEO warned you 2 days ago. Today proved him right. Number 3 is Micron. 9 times earnings with sold-out AI memory supply through 2027. The valuation gap is extraordinary. Number 4 is Bloom Energy. On-site power that gets stronger every week the crisis continues. Number 5 is Palantir. Highest risk, highest conviction. Reports earnings tomorrow. The window to position correctly is not closing. It already started closing today. Disagree? Tell me in the comments. Which stock are you buying? Which one do you think I am wrong about? Subscribe for real-time analysis on what is actually happening in markets. No sponsors, no fluff, just the truth. See you in the next one.